our thoughts with you, David.
A lot has happened since last year on. I don't have to state the obvious. So we're going to be talking about the news coming out of this morning, 4 a.m. It was reported that Russian troops have started their attack on Kiev. And lots going on right there. People are struggling to get out of the city. Terrible, terrible thing happening in Ukraine. So let's talk about market impacts. Gold is up on the news. Well, it has been up for the last 4 weeks, really. We've breached $1,900 again this morning as we speak. I want to ask you this, Alain. People are talking about gold reacting to the news in Eastern Europe. Gold is reacting positively to the possibility of an all-out war. But let's look at historical precedents just over the last 30 years. I'm not talking about World War II. I'm not talking about since Vietnam. Just the last 30 years, what were the major conflicts that involved multiple nations? Well, the Gulf War in 1991, okay, gold did not move on that news. In fact, it went down. Later on in 2001, we had 9/11. Gold, yes, started moving up, but for different reasons. Yes. The invasion of Iraq was 2003. Gold already went up, so it didn't really react to that. Yes. So there's no historical precedence over the last 30 years for gold reacting to war. Is that happening now, or is gold moving up for a different reason? What do you think?
I think that the interest for gold has reflected the fundamentals, and the fundamentals are the market understanding that rates, and that was several months ago, that the market understood that rates wouldn't be able to go much higher. And I look back at the month of October to 2021. So since October 2021, the interest for gold has gone up in a measured way. And the reason for that is, again, the fact that when you have inflation of 5%, 6%, 7%, and your 10-year, 20-year, 30-year nominal rates are half of those numbers or a third of those numbers, the market is already telling you that they don't believe in more growth, that they didn't believe in higher rates, and that we were facing peak growth and peak inflation. This is what the market was telling you 4 months ago. Yes. And this has gone up crescendo until, of course, what happened yesterday and the prior day and a week ago and 10 days ago. The market felt that there was a tension and gold reacted to this tension. But gold, maybe that war that started yesterday was a trigger, but all the ingredients for a higher gold price were in the making 4 months ago, and they really impacted the price of gold over the last 4 months positively.
And that's an excellent point, Alain, you brought up, because so many people have been telling me, look at how gold's been performing as a safe haven asset in the face of war. Everyone's rushing to this safe asset because war is breaking out. Look what other things are supposed to be doing well, but they're not doing well. But you brought up a good point. Gold's moving up anyway. It's not so much that it's reacting to Ukraine, it's reacting to inflation, right?
Absolutely. It's reacting to inflation. It's reacting to, to a lot of uncertainty. And again, the fact that we are in a world of growth deceleration. This is the reality. The fiscal, the monetary stimulus are gone. And if they are not gone, and if suddenly we'll have a new reversion of policies, it's because the world is falling apart. And nobody believes that the world is falling apart. Okay. So the reality is, the main scenario, the more realistic scenario is that growth is decelerating and inflation seems to be sticky versus transitory. So sticky inflation, lower growth, a war that has just started, obviously makes gold a very attractive investment.
Well, some would argue that this war that just started in Ukraine may actually exacerbate inflation problems, because when entry prices are going to go up, supply chain issues might become worse. So what do you think? What's your outlook on inflation in light of what's just happening right now?
Well, it's really hard to have a very serious to make a serious statement with high conviction, because at this point, it's all about speculation. Really, nobody knows what's going to happen tomorrow. Nobody knows.
Well, that's an honest
but the
answer.
reality is, but the reality is that there is a higher level of economic uncertainty. This is the reality. And the reality is that this is going to affect the consumers and the companies. There is no way we can go around this reality. How will oil, how will natural gas, how will palladium, how will wheat react? We know how they are reacting today, but how will they react over the course of this conflict? Probably they are heading higher. Probably,
Yes.
but this is not. This is more about speculating rather than about talking about the fundamentals that we are living in and that are really pulling this gold price higher.
Oil does have a precedence of moving up on the outbreak of war. Those conflicts I just mentioned, the invasion of Iraq, Gulf War, huge moves for oil in both situations. So
true,
you're right.
But David, imagine that tomorrow, America and Europe settle with Iran.
Yes.
Just imagine, and this is not pure imagination. There are a lot of talk about them, all these parties getting very close to a conclusion. So this could suddenly bring a lot of oil into the market, and oil that is ready to be delivered, doesn't have to be pumped. So again, this is all about probabilities of potential scenarios happening. And I'm not in that, I don't play in that field. I look at the reality, and the reality is telling us deceleration in growth, sticky inflation. This is a good ingredient for gold.
I'm not asking you to predict the future in terms of what's going to happen with war.
You will think they are going to be lower quickly in the very short term. Right. But for the midterm, I'm more perplexed. Let's put it this way, because I don't think that we are in a hyperinflation environment.
Right. You have told me before in prior interviews that real interest rates are one of the most important drivers for gold price. So what does this mean for gold? What's your outlook for gold given everything we've talked about?
We think that gold is going, we always described gold as a cyclical asset, always. And you have to, therefore, study it as a cyclical product. That cycle, the last bull cycle, started at the end of 2015. And we are entering the second half of that bull cycle. This is what all our instruments are telling us, that we're entering that second bull market phase. Where is it heading? I don't know. Is it going to be 2,500? Is it going to be more? I don't have any idea. But what I know is that gold mines are significantly undervalued versus the equity indices. And what I also know is that gold versus other commodities is again at the trough. So technically, and on a relative basis, gold and gold mines are massively undervalued, massively. And those levels where we're at today, they remind us of the 2015 and 2018 years, where suddenly you had 100 plus return on gold mines again. That was back in 2016, early 2016 and 2018. So the ingredients are in place. Forget what is happening for gold. Forget what is happening in Russia and Ukraine. What is happening there is terrible, but we should just remain focused. And the focus, as you said, are rates. The focus is the relative valuations of those assets versus others, and where we sit in the cycle.
Yeah, it's I think the English idiom is it's a red herring. It's a distraction. It's not the main focus here. Okay, let me just make one more remark. Make one more remark. You did say that inflation has peaked, but you also said that gold is reaching a second bull cycle. So again, how do you resolve these two?